So let's take a look at what's going on with the rupee. It hit it's close to its all-time lows on account of higher oil prices and a strengthening dollar. To discuss both the technicals and fundamentals facing the rupee at this point in time, we're joined by Khoon Goh, Head of Asia Research at ANZ Banking Group. He joins us on the phone line from Singapore. Good morning, Khoon. Thanks very much for speaking with us. What do you make of where the rupee is? It's the worst performing currency from amongst a bunch of emerging market currencies at this point in time. And there do seem to be views that it could get, further worse from here on.
Yes, good morning. Well, near term, it looks like the rupee is certainly headed for further weakness, and it's largely due to the same factors that have caused rupee weakness throughout this year. Oil prices having rebounded, even though OPEC is looking to increase production, is going to weigh on India's current account deficit, obviously, and also push inflation higher. Now, the RBI having hiked rates, looks like they'll probably need to do more, so that's going to be negative near term for growth. And overall, we have the U.S. monetary policy looking to hit higher still. So all these are putting stresses on EM generally and for India in particular, given that it runs twin deficits, is coming under greater scrutiny compared to other emerging markets in Asia.
Can't not talk about what's going on with the yuan or the renminbi. What's your view on the sort of slow devaluation we've seen of the yuan over the last several weeks now? It's not a direct devaluation, but it seems to be coming more from the trade war fears as well as the slight easing that we've seen in reserves by the Chinese central bank.
Yes, the weakness in the renminbi is predominantly due to the escalating tensions between U.S. and China, and that's having some ripple-through effects into the rest of the Asian markets as well. Now, I don't think that the weakness in the yuan has too much of a flow-through into India, just simply because India is not a large export-dependent economy, but it's the overall sentiment towards EM generally from the trade tensions that is causing the investor outflows that we've been seeing. Now, in terms of the yuan, a lot of this is due to positioning. The yuan was strengthening quite sharply over the early part of this year, as we saw a lot of investors going into China on the back of MSCI inclusion and prospects for bond inclusion as well. But we're starting to see some of those flows turn as investors start to worry about what the escalating trade tensions might do for Chinese growth in the second half.
Khoon, I think some people have moved the conversation from trade wars to currency wars. Do you see that as a near-term or medium-term likelihood?
I don't see this as a currency war in the current environment. I think my view is that the weakness in the renminbi is purely driven by the market as they get concerned about the impacts of trade tensions. This is not something that the Chinese authorities are trying to engineer on purpose. So this is very different from what we saw in 2015 when the one-off devaluation obviously sparked a huge weakening in the yuan. This time around, it's market-driven, and the Chinese authorities, for their part, they haven't been actively intervening in the FX markets, but they've been trying to set the daily fixings stronger in order to try and slow down the weakening in the renminbi.
Okay, I was looking at your most recent report, and it doesn't seem to suggest, at least at that point in time when you published it, that you were looking at a level lower than about 68 or thereabouts for the rupee. Can you talk us through what you expect will be the near-term, medium-term, and long-term impact of all these various forces that are pressing down on the rupee?
Yes. Well, FX markets obviously are inherently very volatile. So in a very near term, from a technical perspective, I think everyone is looking at the same thing. So the all-time lows in the rupee of around 68.9, I think it's only a matter of time before that gives way. And then the big level is around 70, and I think there's a very good chance that we might see that getting hit in the very near term, perhaps this week or into next week, particularly if oil prices continue to increase and if the US dollar continues to strengthen. I think further out, I think we should remember that at some point, the sell-off that we are seeing in EM will start to fade, and we should start to see some recovery at some point. I think while we will need to see some of these trade tensions start to ease off before we see that. Overall, we've seen huge amounts of foreign investor outflows, not only from India, but also from across Asia and the whole of EM complex in particular. But some of these currencies and asset prices are getting to, I guess, more attractive levels. And at some point, I do expect foreign flows to return. But we really need to see these trade tensions start to ease off. And whether it comes from the U.S. side or China side doesn't matter, but we really need to see some signs of some peace offering from either side to calm down these trade tensions before we start to see some recovery in asset prices.
Khoon, there was a Barclays report that suggested that by the end of the year, the rupee might even hit 72. Is that a view that you subscribe to?
It's currently not based on our forecast. We expect to see some retracement of these current low levels towards the second half of the year. Again, that's based on our view that overall we're still seeing decent growth out from Asia, and we do hope that we will see some easing in the trade tensions. But as I said earlier, if we do not get any resolution on the trade tensions, then I think it's very well likely that we could well see further new lows in the rupee.